Good morning. The number one trick to getting a lower mortgage rate without paying points. And most borrowers assume that there are only two ways to lower their mortgage rate. And those options really are told to me to be they're going to pay discount points or they're going to wait for the rates to drop. And I suggest that that may not be right. So the real trick the lenders don't explain very clearly is this. Strategic lender credits can reduce your effective rate without paying points, often with little to no out of pocket cost. So we'll have to break that down a little bit more, but it is possible. And at Medallion Funds, this is the strategy, or this strategy is one of the most powerful tools we use to structure low cost refinances and purchases for smart borrowers. So, first, let's talk about what are mortgage points and why they're often overused. So, mortgage points are prepaid interest, typically 1% of the loan amount for a marginal rate reduction. While points can make sense in long term hold strategies, they often fail the break even test for homeowners planning to refinance who may have a shorter window of how long they're going to be in the home still, but also buyers who are expecting to be mobile and needing to move, but investors who are also just looking to optimize their cash flow. And paying points locks capital into a lender and not into your balance sheet. So the real strategy here is lender credits plus smart pricing. So instead of paying points, lenders can credit closing costs in exchange for slightly adjusted pricing. So you have a par rate and you can raise it a little bit to cover the cost. So that way you're not coming out of pocket and setting your amortization back is really the high level point here. But basically, you would want to make this make sense and still save your money on your monthly mortgage payment. And yeah, the point is really to reduce or to eliminate closing costs altogether, but also to preserve your liquidity and achieve a competitive, effective rate given all costs, and which often results in shorter break-even timelines for you. So this is especially effective for rate and term refinances or purchase transactions with seller credits or self-employed borrowers who are just really looking to manage their liquidity, but also investors who are focused on return on investment and not vanity rates. So let's take a look at an example points versus a low cost structure. And I think these are helpful because numbers help. But say it's a $450,000 loan, and you have the option A to pay points of about 9,000 up front, and you reduce your rate about a 0.25, which means you're going to break even in about 6 to 8 years. Or you have option B with a lender credit strategy where it's 0 to 1,500 bucks out of pocket, and it's a comparable effective rate, but your break even is immediate. Same loan, same property, very different financial outcomes. And I'd love to talk to you more about how we can make it make sense for you. But let's talk about why most borrowers miss this. So often retail lenders are selling rates and not structures. And they quote what's easiest and not what's optimal for their clients. And as a broker, Medallion Fund shops across dozens of lenders to engineer pricing that's going to produce a win win balance for you. So, what that means is we're going to look at rates, fees, the cash flow potential, and your time horizon. And we have to balance all four of those. So, this is underwriting strategy, not salesmanship. We're advisors. That's what we're here for. But this can be used for a refinance or purchase, and this really works in both situations. So, refinancing, you're looking to lower your monthly payments without resetting your cash position. Whereas in a purchase loan scenario, you can pair lender credits with seller concessions to reduce your cash to close without inflating the rate unnecessarily. So, the bottom line for the day is that the number one trick to lower rates isn't paying points, it's just structuring the loan correctly. And it takes an advisor who's been doing this over 20 years to give you these straight talk answers. And if your lender only talks about rate, you're missing half of the equation. So if you want a custom low cost loan structure, give me a call. We can talk. We can analyze your time horizon is the first one, but your cash flow goals, the refinance likelihood, and any opportunity cost of capital. And if please do subscribe to the YouTube channel for weekly breakdowns or reach out directly to to structure your loan the right way. And my website, personal website, is billrapponline.com. Love to talk to you more. You can figure out how to get a hold of me, and look forward to speaking to you. Take care.